Hello and welcome to our market alert video for the week ended December 17, 2021. Gosh, it's a week before Christmas. Yikes, better get your shopping done. I got some very good news here, and I want to thank you guys for this. I just got the statistics. Apparently, for the year, we've had over 280,000 views of this video market alert. So I want to thank you guys for doing that. I love your support. Share this video with as many people as you wish. Make it their Christmas present. Give it to them as a present, and hopefully you've gotten some good ideas. It's helped you to navigate these murky waters that we are going through, this pandemic, the stock market, and if you can help them as well, that's a good thing. My mission in life is to help as many people as I possibly can to have financial security, to enjoy their retirement. So the more people you share it with, the more the opportunity is there for that to happen. So let's talk about what happened this week. Well, as you may have heard, the Federal Reserve announced that they are going to they're going to increase their tapering. So what does increasing tapering mean? It means they're going to reduce their bond buying. So they're going to increase tapering, which means reducing the amount of bonds they're buying. So it's kind of a reverse speak, which is normal for the Fed. But why are they going to reduce buying bonds? Well, the reason why is because, as with most things, if you increase the demand for that thing, you drive the price up. And so by the Federal Reserve buying bonds, what they're doing is they're increasing the demand for those bonds, making the price go up. If the price of bonds go up, then interest rates, which have a reverse relationship, tends to go down. So they buy bonds, they push interest rates down, they take cash, and they put it into the system, because by buying the bonds, they're exchanging that for cash. So that stimulates the economy as well. So they've decided that they're going to increase their tapering, which in the reverse means they're going to reduce their bond purchases. So the next thing they said is that next year they're planning on increasing interest rates 3 times. Again, why? All of this, in our view, is because inflation has turned out to be a bigger issue than even the Fed thought, right? They've stopped using the word, which I no longer am allowed to use. Starts with a T. Anyway, and so now what they're talking about is raising interest rates to mitigate the effects of inflation. So is this good or bad news? Well, in our view, it's good news. What it means is that they view that the economy is now able to grow on its own. It doesn't need as much stimulus. It doesn't need them to continue to buy bonds, drive interest rates down, and flood the economy with more money. They are also saying they're going to raise interest rates, which is going to be, in effect, reducing the amount of economic activity, therefore driving down inflation, hopefully. So all of that, we actually view it as a good sign. Now, whenever the Federal Reserve makes a change, there are people invested who say, okay, time for me to invest differently. There are people who are not invested who decide to do something else. All kinds of stuff starts happening. It's a reshuffling of the deck, if you will. And when that happens, there's a lot of volatility. So we believe that what we're seeing this week is mostly because of that. The rest of the story, of course, is the pandemic is continuing. We're Omicron, and who knows how much more we're going to have. We have inflation, as you know, the supply chain, all those things. But again, our mantra is the same. It's going to be extremely volatile heading into the year end and early next year. We've got tax reform. They've tabled it till next year, it appears. So we've got all those kind of things happening. But the overall picture is that company profits are strong. And in the end, we believe it is that profits drive stock prices. And if profits are strong, stock prices should remain strong as well. Now, having said all of that, anything could happen and anything can change in the blink of an eye, which is why we have our invest and protect strategy ready to be implemented should this eventuality happen. So if things turn south, we're going to take action to help protect against that downside. So I want to wish everybody a very Merry Christmas, a Happy New Year, if I don't talk to you before then, and happy holidays, happy Hanukkah, and I hope all is well with you, your family, your friends, and your health. So take care, and we will talk soon.